I know where we're going to start. It's China, because that does seem to be sort of the heartbeat of the market right now.
But it has to be the heartbeat of the market because it's so important for so many things, right? And so until you get finality and clarity on that, and real clarity, and we're getting closer, the market's telling you we're getting closer, I think that's going to continue to be the topic as we go through, day to day to week.
We've had a bit of a debate here, although it seems to be somewhat one-sided. How much is already in the market in terms of expectations that it's a positive outcome? How much downside would there be if this thing took an unexpected bad turn?
So I think there's a lot of it already priced in the market. I'd say there's probably about 75% of it priced into the market, that everyone's expecting that we're going to get this conclusion and the finality to it, right? I think if it all of a sudden takes a turn, which it could, although I think those odds are low, but if it does, I think you'll see the market correct very swiftly. But that being said, I don't think that's going to happen. I think we're going to go into this, whether it's, another week, another month. The fact is you could almost see the light at the end of the tunnel, and I think the market's telling you that.
So, but most people believe we're not going to get a trade deal on March 1st because the bar, David and I were talking about earlier, is so high.
That's right.
It's not about buying soybeans. It's about very, very complicated issues. That's what Lighthizer is trying to work out.
It's about forced technology transfer.
So they announced a deal announcement on March 1st. It's extended to June 1st. 10% tariffs still in, and we'll see if we can come to a comprehensive deal. The market's fine with that.
The market's fine with that because I think the market was more concerned about March 1st being this drop-dead, unnegotiable date, and he made it very clear yesterday, and he made it clear, they started to waver around that last week that he was going to be open to moving that date. It wasn't set in stone. If the trade talks were proceeding, that he would be willing to move it without imposing taxes. And so the market absolutely loved that. You saw what happened last week. The market really rallied on Friday when that came out. And so I think that's the right thing to do, actually.
So we got the Fed basically behind the market. Yep. We've got perceptions that a deal is out there on the horizon.
Right. And we're kissing 2,800 on the S&P, which just psychologically is a big round century mark number, which will itself
And how do you deal with this lousy data? Look what the Philly Fed today. We had the European economic data Carl was talking about. One day, could we have some decent European economic data, please?
Well, maybe not right now. But the fact is, this weak data actually only keeps the Fed at bay, which the market also likes, right? Kind of bad news is good news. And I think the Fed made that very clear again yesterday in their statement when they talked about, kind of policy and looking forward. And although they still left a rate hike on the table, they're not really committed to it. And I think the market's okay with that, too. Because, look, last week or the week and a half ago, the tide was turning. And there were people, Joe Livornia from Natixis was talking about a rate cut being the next Fed move versus a rate hike, which I don't see at all. I thought, if anything, it would be the Fed does nothing, but we still think they're going to hike at least once. I think he made that clear yesterday, whenever that is, whether it's June, whether it's September, depending on the data.